Hey, everybody. I've been giving a lot of market updates recently, and I just thought it'd be good to kind of record one where everybody could see it. So, first, let's look at new building permits for the year. You see, kind of earlier in this year, we were really close to 1,900 there on the chart, which the 1,900 is 1.9 million, not 1,900. And that's new permits. And you see, now we're all the way back down to this 1,600 level, which when you go back 10 years, it's actually higher than the last 10 years, but ultimately that's what's created the housing shortage, because when you go back 25 years, you see that we were constantly building at the 1,500 to 2,000, 1.5 million to 2 million house kind of bucket, if you will. Now it did lead to some oversupply, but I mean, we got up to where it was almost 2.5 million homes a month. So you see, ever since all the changes in interest rates have happened, new build activity is down by, call it, 20%. And then you look at new listings, right? I mean, so when earlier this year, you were getting about 102,000 new listings in a 12-week period. And right now in this 12-week period, you're at 78,000. So you can see kind of seasonality is in effect. But this is the lowest in the last 4 years of new listings in a 12-week period. Pending home sales, again, it's low. I mean, it's going to be low with high interest rates and with less inventory on the market. There's less houses being built and there's less houses being put up for sale, right? So just kind of common sense math. Median list price is interesting. If you notice, this is still 7.18% above last year. And ultimately, this was 11% over. So the difference, go back 3 years, you're at 277 on the median list price. Now you're $100,000 more. Days to close, very interesting. You look at it, you would think that this was taking forever. It's actually above 2019 timeframes, and 2019 was a great market. I like to look at months supply. This is the big indicator. This is the thing that we really don't want to get past, this 15, 16 week period. This time of year specifically, maybe in the spring when everyone's putting their houses up for the sale, maybe 21 weeks of supply, but really and truly, this is still a very, very low number. As a matter of fact, the only number's lower during COVID and the year after COVID. So, I mean, that tells you that. And then ultimately, sell to list ratio. Houses are basically selling for 1% less than they're listed for, which last year they were selling for 1% more. And at the peak this year, they were selling for about 2.5% more on average. So then I like to jump all the way to median price per square foot, because ultimately I believe that replacement cost is one of those things that's going to keep the market up, because once the houses get cheaper to buy existing versus build a new, they become a good deal. That's why investors are still buying. So we're down to 198 a foot, which is still, what is that, 8%, 7.5% higher. But, you were at 143 a foot 3 years ago. So lots of room to go up and down. The market's not doing as bad nationally. You may have some little areas, but here's the deal. Here's what's happening on lending. Look at interest rates. I put this little chart together. Here you have, normally, this is on the 5-year. Normally, the 10-year is more expensive than the 5-year, and the 2 years cheaper than the 5-year. So that's normal. So in here you see they invert a little here, get all jumbled up in 2019, because I think we were kind of being a little funky monkey with our monetary policy. COVID happens. They maintain their relationship they're supposed to. Then, bam, we have the inversion. We have the inversion because now, at the end of this quarter, here you go, you look, you've got 4% 10-year money. You've got, or 4.5%, you've got 4% 5-year money, and you've got 3.5% 10-year money. So I'm sorry. You've got 4.5 2-year, 4 5-year, and 3.5 10-year. And that's all because that means investors are thinking rates will be higher for the next 2 years, then they'll come down over the next 5, and they'll definitely come down over the next 10. So that's why loan to values are getting cut. That's why investors are offering less, because this is going to be a 1 to 2 year ride. But that just means there is a ton of opportunity out there for me and you. So let me know how I can help.